People, peace and love. Let's get into this Megaphone Top on Apple. I'm trying to zoom out a little bit so you can see more of it. All right, it seems to be coming here, boom, to there. All right, this Megaphone Top. This is supposed to be a long-term bearish signal. All right. And where it signaled that, it did continue to the downside following this point. So that is good to know. But it's including these candles, these trend lines, this would be considered this huge run up followed by a huge run down, then some sideways action, and then boom, we taking it to the downside. So what is a Megaphone Top? How do you begin to recognize it on the daily time frame? So let's get into it. Okay, so a Megaphone Top is relatively rare and is also known as a broadening top. Its shape is opposite to that of a symmetrical triangle. Okay, so more on that symmetrical triangle to come. The Megaphone Top develops after a strong advance in prices and can last several weeks or even months. A Megaphone Top is formed because the prices make a series of higher highs and higher lows. Okay, that's easy to understand. The Megaphone Top usually consists of 3 ascending peaks and 2 descending troughs. So we got 1, 2, 3. So 3 peaks, and we have 1, 2 descending troughs. The signal that the pattern is complete occurs when price falls below the lower low. Okay. Volume in the Megaphone Top usually peaks along with prices. It is usual to see trading volumes increase or remain high during the formation of this pattern. The eventual breakout and reversal can be difficult to identify at the time of its occurrence because volume does not appear unusual. Okay, so the eventual breakout and reversal can be difficult to identify at the time of its occurrence because volume does not appear unusual. Okay, so this is when you just see the drop off, the sell off, the crash, boom, after things was going relatively smooth. All right, so target price. Let's read this. The target price provides an important indication about the potential price move that this pattern indicates. Consider whether the target price for this pattern is sufficient to provide adequate returns after your costs, such as commissions, have been taken into account. A good rule of thumb is that the target price must indicate a potential return of greater than 5% before a pattern should be considered useful. However, you must consider the current price and the volume of shares you intend to trade. So that's a good point. The good point is you don't have to play every pattern because your trade should be a reflection of returns on your money. So you could see a Megaphone Top, and if it's only looking like it's going to have the power or momentum to get you a 3% return on your money, then you might as well wait for a better opportunity setup. All right, so criteria that support volume. Again, heavy on the volume. Volume in the Megaphone Top usually peaks along with prices. A strong volume spike on the day of the pattern confirmation is a strong indicator in support of the potential for this pattern. All right, so let's talk about the underlying behavior. What is creating this pattern on the chart? The creation of the pattern reflects a period of time when bulls and bears are battling to gain control of the stock. The pattern occurs after the bulls have been charging and driving the stock price appreciation higher. During the formation of the megaphone top, however, bears are exerting increasing influence on the price and causing it to set a series of lower lows. The increasing volatility eventually creates a sense of uncertainty, leads to profit taking, and deters some of the bulls from making any further commitments. The bears eventually triumph. So this is crucial. So you can, if you really were sharp enough, you could pay deep attention to price action, and based on how the range is being played for the session that you're looking, or the candles, or the time frame that you're looking at. If you notice the price going up, $9, $10, $11, every time it go up, it come back down. $9 come down to $7, $10 come down to $8, $11 come down to $9. We're seeing higher highs and higher lows, so you can start to recognize the pattern that might be forming and understanding what that would lead to. If you start seeing higher highs, 9, 7, then it go up to 10, then it come down to 6, then it goes up to 11, then it comes down to 5. Now we got higher highs and lower lows, so we can wrap our mind around what type of patterns that could form. So you could really be vicious with the price action once you have a deep knowledge of how the charts work, what charting looks like. Okay, so this, ladies and gentlemen, is the megaphone top. All right, so peace and love. I hope you get rich. Please pay attention. Keep a lookout for this long-term bearish signal. If we start to see the megaphone top formation, then we can very much anticipate a long-term bearish move. Peace and love, and I hope you get rich. Please subscribe to the channel. Let's get this thing to 1,000 subscribers this month. All right, let's get 100 likes on this video. Comment down below if you found this helpful, and I'll see you all in the next video. Peace and love, and I hope you get rich.